multiple long liquidations and an aggressive sell to bounce mode, followed by a short squeeze after Jackson Hole right back to all-time highs. Let's review the structure on ES and talk about the trade plan for this week. For last week, we discussed the importance of this multi-day base between 64.53 and 64.94, with the primary pivot for last week being the range support at 64.53. Failure there would lead to a long liquidation, which could potentially see a range traversal all the way down into 63.73, and that's exactly what we saw on Tuesday after several days of weak basing here at support, which also actually started with the look above and fail from the week before at all-time highs. So look above and fail, range traversal down into range support, weak basing, and then failure of 64.53, failure of a multi-day base up here at the top. We saw that long liquidation, which made quick traversal down into 63.73, prior range support and prior demand zone. Higher time frame, you can see that we've been trading inside several large boxes that have been stacked on one another. So you can see, first way back in July, we tested 63.73 from below this as resistance. When we were able to break through that, we then end up forming another box on top of that, and once we failed that, we traversed back down into the prior box. And then once we were able to reclaim 63.73 in August, we were able to traverse back up this range. Now we've been sitting at a new small basing range here below all-time highs. So this week, the failure of 64.53 led us to traverse back into this prior range below, and you can see the liquidation there ended up making that traversal all the way back down into the bottom of this prior box. So this base underneath all-time highs, we had longs accumulating in around 64.53 for several days here, and then the failure of that led all of those longs to liquidate, which led us to traverse all the way back down that prior range. Into the week, once we got down into this prior demand zone at 63.73, we ended up having several nice longs available from that area, multiple bounces, traps below that, liquidity grabs below that ended up getting a few short squeezes, and into the week, we ended up seeing a smaller range ahead of Jackson Hole between 63.73 and 64.19. So being able to clear 64.19 and the dovish comments from Powell, the market pricing in a larger percentage chance of a rate cut in September and 2 rate cuts by the end of the year, combined with clearing this technical resistance, and we saw this really large squeeze traverse right back to the top of the box, back into the prior box right underneath all-time highs here, back into the 64.53 to 64.94 range that we started the week. So once the range low failed at 64.53, we went into this pretty aggressive sell-off, all bounces sold. So being short underneath the failure of 64.53 was the easiest trade setup this week, with bounces being sold and then an area to reload shorts on back test into 64.19 were sold here, and we rotated back down into the prior lows here of the week. Longs were difficult, especially early on in the week when we were in sell to bounce. Those liquidity grabs in 63.73 worked nicely for short covering squeezes, and then multiple failed breakdowns of prior day low, overnight low here into this demand zone that ended up working well ahead of Jackson Hole. So let's talk about the plan for this week. We are back inside this box underneath all-time highs from 64.53, 53 to 59 zone here. It's the range support there, and then some resistance at 64.94. So we're back inside of this. The weekly pivots for this week will be 65.35 to 40 resistance above, which is the resistance of a broadening formation that's formed from these two prior highs if you draw your trend line here. And then 64.53 to 59 will be the primary pivot again. Buyers will look to hold above this, to hold up in this range, or trap below and reclaim for a traversal back up. Below there, 64.19 and 63.73 will also be pivots that you can trade around this week. Early on in the week, you do need to be fairly cautious, as squeezes like this after an event do have a chance to retrace in the following days and week after the event, so we'll be watching that. And the signal for that will be the failure of 64.53 to 59. So if this is offered, especially if it's offered and rejected on a back test, then we can retrace this squeeze very easily. So you'll want to use these box ranges and use the kind of balance range rules to trade around this, where traps below the range that recover and bid can rotate up the range. It looks something like this. So if you see a trap underneath the range that is able to reclaim bids here, it can try to rotate back up. And if we test below the zone and it gets reoffered, then we can see that range traversal down, very similar to what we saw last week. Some of the top setups to watch next week would be that look below and fail of 64.53 54.53 to 59. So if we do get that trap below that is then able to reclaim, holds above here, that would be a long I would be looking for that traversal back to all-time highs. And likewise, if we do see the failure there, and especially a reoffer, if we see failure that is rejected on the reoffer here and then makes new lows, you'd want to get short for that range traversal down. Also, if we really see a sell-off next week, the failed breakdown of the prior week low at 63.63, a potential look below and fail of this prior range here would be a very strong long setup for rotation back up towards 64.53. And lastly, if we do get a move higher early in the week, you can look for shorts into 65.35 to 40, which would be this kind of broadening formation, which will rise as the week goes on. But that would be a strong short setup at that resistance for potential move back down towards 64.53 and then towards the bottom of the broadening formation on higher time frames. That's how I'll be trading ES this week. If you want to trade live with us every day, join us at Trade with Insight.